Inheritance tax. Few taxes are quite as emotive or as politicised as inheritance tax, which was once confined to the very wealthy, but today is no longer the case. Even families and individuals with a relatively moderate level of wealth may need to plan ahead to ensure that their assets are passed on to their loved ones as efficiently as possible. Size does matter. Effective inheritance tax planning could save your beneficiaries thousands of pounds, depending on the size of your estate. At its simplest, inheritance tax, or IHT, is the tax payable on your estate when you die if the value of your estate exceeds a certain amount. The inheritance tax thresholds. It's currently paid on amounts above $325,000, $650,000 for married couples and registered civil partnerships, at a rate, wait for it, of 40%. Now, if the value of your estate, including your home and certain gifts made in the previous 7 years, exceeds the IHT threshold, tax will be due on the balance at 40%. The rate may then be reduced to 36% if 10% or more of the estate is left to charity. Without proper planning, many people could end up leaving a substantial tax liability on their death, considerably reducing the value of the estate, passing to their chosen beneficiaries. Where are the exemptions? Well, any gifts between husband and wives or registered civil partners are exempt from an IHT, whether they were made while both partners were still alive or left to the survivor on the death of the first. Inheritance tax will be due eventually when the surviving spouse or registered civil partner dies if the value of their estate is more than the combined threshold, currently £650,000. If gifts are made that affect the liability to IHT and the giver dies less than 7 years later, a special relief known as taper relief may be available. The relief reduces the amount of tax payable on that gift. How do we calculate the tax payable? In most cases, inheritance tax must be paid within 6 months from the end of the month in which the death occurs. If not, interest is charged on the unpaid amount. IHT on some assets, including land and buildings, can be deferred and paid in instalments over 10 years. However, if the asset is sold before all the instalments have been paid, the outstanding amount must be paid. The IHT threshold in force at the time of death is used to calculate how much tax should be paid. Structuring your affairs efficiently means starting the correct planning early enough. With regards to inheritance tax, it's payable by some people who, for the most part, could have avoided it. If you want your estate to go to your loved ones with the minimum amount of IHT payable, you should obtain professional advice. There are currently a number of generous reliefs relating to this unpopular tax. In addition, the new main residence transferable nil rate band from the 6th of April 2017, there will be a new main residence nil rate band, also called the family home allowance, that will apply when a main residence is passed on to a direct descendant. This new main residence transferable nil rate band will work alongside the existing nil rate band, which is currently £325,000. In the same way as the current nil rate band, any unused main residence transferable nil rate band will be transferred to a surviving spouse or a registered civil partner. It's a bit of a mouthful, isn't it? Well, a property which has never had a residence of the deceased, such as a buy-to-let property, for example, will not qualify. The allowance will initially be set at £100,000 in 2017 and 18, increasing to £125,000 in 2018-19, £150,000 2019-20, and up to £175,000 in 2020-21, and then the increase each year in line with inflation. So, it is therefore possible that by 2021, an individual will have their own nil rate band of 325,000, as well as a main residence transferable nil rate band of 175,000 in respect of the main residence, plus a nil rate band of 325,000 inherited from the spouse, and a main residence and transferable nil rate band of 175,000 inherited from the spouse. This gives a much advertised total of £1 million. It's also worth noting that the current band of 325,000 is now said to remain until 2021. There's also going to be a tapered withdrawal of the main residence allowance for estates worth more than £2 million. Therefore, it makes sense to ensure that your affairs are structured in the most tax-efficient way possible. However, it's easy to keep up with many exceptions and reliefs available. So, what should we be considering? Trusts. Trusts can sometimes help you eliminate unnecessary tax charges, enabling the maximum possible part of your family's wealth to be preserved. You may like to transfer part of your wealth to a family member, but still retain control. A specialist can advise on setting up trusts and can take care of all the administration. Wills. Now, one important way to minimize IHT is to make a will, so as to leave your family with the maximum assets at the least tax cost. I'm always happy to be of service to you. Please feel free to contact us. Don't forget, we're hosting a seminar on inheritance tax and wealth preservation on the 28th of January at 6 p.m. I look forward to meeting you there.